We've got some examples here, as I know you absolutely love these, and let's run through one here. On May 10th, year 3, Olivia gave her friend Ethan a vacation property valued at $120,000. Only we could all be so lucky as to have a friend like that. Olivia's adjusted basis in the property was $100,000. No gift tax was paid. You're going to see this a lot, and what does that really mean? It just means, well, if we had paid any gift tax, it's kind of like withholding from your income, reducing your tax owed, something like that. That's kind of the same point. Or estimated tax payments, that's also kind of the same concept. On October 15th, year 3, Ethan sold the property for $140,000. Guess, he didn't appreciate the gift, just wanted to get that out of there. Well, what is the year 3 gift amount subject to tax? That's going to be $120,000. The amount of a taxable gift before considering the annual exclusion, which again, please memorize, is the excess of the fair market value of the property transferred over the fair market value of the property received in return. And in this case, there was no property given in return. In this case, the fair market value of the property transferred was $120,000, and no property was received in return. We gave $120,000 of value, received nothing, but I guess that's a gift, right? You don't have the expectation of receiving anything. Next, what is the year 3 gain or loss recognized on this transaction? That is going to be $40,000. And in general, the basis of gifted property is the basis of that property in the hands of the donor. Now, since Olivia's basis in the vacation property was $100,000, Ethan's basis in the property is also $100,000. So when Ethan, as we see here, goes and sells the property for $140,000, he's going to recognize a gain of $40,000. There we go. One thing I like to say throughout is everything gets taxed. If it's not getting taxed, where is it going to get taxed? So we see that the primary gift is going to get taxed on behalf of Olivia, but then Ethan's going to pay the appreciation of that, right? Because obviously the value of the property went up if we're selling it for $140,000, and the basis was $100,000, the fair market value at the time of the gift was $120,000. So every dollar is going to get taxed. Where is it going to get taxed? And then obviously corporations, we have double taxation. So just remember, if the tax has to get paid, where is it getting paid? Who's responsible for paying it? And are there any other exceptions? We've got more examples here, and this one's a lot more in depth, and as it should be, right? You got some fun things to see. Well, on April 20th, year 3, Alex gave his brother Sam a rental property with a fair market value of $300,000 when the adjusted basis was $220,000. Upon the transfer, Alex paid $90,000 of gift tax related to the gift. Sam later sold the property on September 9th, year 3 for $330,000. Similar format to what we saw before. What is the year 3 gift amount subject to tax? That is going to be $300,000. Well, the amount of a taxable gift before considering the annual gift exclusion is the excess of the fair market value of the property transferred over the fair market value of the property received in return, if there is any. But again, we're dealing with lots of gifts, so we're likely not going to see any property received in return. We're seeing a lot of examples. Make sure you have these down. In this case, the fair market value of the property transferred was $300,000, and no property was received in return. Let's run through here. Well, what about the year 3 gain or loss recognized on the transaction? Well, that is going to be $84,000. And how do we get there? In general, the basis of gifted property is the basis of that property in the hands of the donor. However, if a gift tax is paid on the gift, the recipient's basis is increased by any gift tax that is attributable to the appreciation in the value of the gift. So you see that they paid $90,000, the value of the gift. In this case, the amount of the gift tax attributable to the appreciation in the value of the gift was $24,000, and let's run through how we got that. First, we take the fair market value of the property at the time of the gift, which is $300,000. We're going to subtract the basis in the property, and what appreciation did Alex see while he owned the property? Well, that was $80,000. Then we're going to take the fair market value of the property at the time of the gift, and we're going to say that the gain realized, that the gain that we saw appreciated, divided by the fair market value that we gave up, that's going to give us 26.67%. Now, if we multiply that by the total gift tax paid of $90,000, that gets us to our total answer here of $24,000. Now, what is that again? That is the gift tax attributable to appreciation. That is the tax that we are paying based on the value of this going up. And we kind of see this more here. We see some more points. Well, Sam's basis in the property is $244,000. And that is calculated as follows. Well, we take the basis of the gifted property in Alex's hands, which was $220,000. We're going to add the gift tax attributable to appreciation from above, which is over here, the 24. So the basis of the property to Sam is going to be $244,000. Looking very nice. Now, lastly here, what about Sam's recognized gain on the sale of property? That is $86,000. And how do we calculate that? We're going to take the sale price when Sam went and sold it for $330,000. We're going to subtract Sam's basis, and then we're left with a recognized gain, as we are with normal transactions, normal gains and losses. So that gets us to our total value for Sam's recognized gain, $86,000. Another great hefty example. Obviously, multiple choice questions will not be as in-depth as this, but want to make sure that we're seeing pretty much absolutely every sort of situation that you could encounter on the exam. We've got a little bit of a more manageable example here. On February 5th, year 3, Mark gave his wife Lisa a vintage car with a fair market value of $25,000. Mark received the car in year 1 as a part of an inheritance when the basis was $10,000 and the fair market value was $18,000. No gift tax here was paid. And then Lisa went ahead and sold the car on November 20th, year 3 for $28,500. What is the year 3 gift amount subject to tax? And that's 0, because we see that this is between spouses, and intermarriage transfers, those are not going to be subject to tax. Now, what about the year 3 gain or loss recognized in the transaction? Okay, well, you're going to have to recognize something there because we see that Lisa sold the car. That is going to be $10,500. And how do we get that? Well, the basis of inherited property is its fair market value as of the date of death or the alternate valuation date. This is for estate tax purposes. We'll talk about that as well. So Mark's basis in the car is going to be $18,000. In general, the basis of gifted property is the basis of that property in the hands of the donor. Since Mark's basis in the car was $18,000, Lisa's basis in the car is also going to be $18,000. So when Lisa inevitably sells the car, for we see here $28,500, she is going to recognize a gain of $10,500. There we go, another example in the books. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.